Betting on mergers can turn out to be very profitable for investors, but breaking up deals turning out to be pretty lucrative as well. Leslie Pickard joins us with that story to explain. Hi again, Leslie.
Hi again, Sarah. Pushing for a deal to break up is a strategy used recently by activists like Jana, Icon, and Corvex. The pair trade usually involves taking a long position in a buyer and then going short the seller. And after disclosing their plans to foil a transaction, the hedge fund will benefit from a gain in the stock price of the acquirer and a slump in the stock price of the seller. Think of this as kind of the mirror image of merger arbitrage, which is a strategy that bets on deals closing. And while it can be a headache for management teams and their advisors inking the deals, breaking them apart can be a profitable trade for investors. A new study found that returns from so-called activist arbitrage are about 5.5 percentage points higher than what shareholders would have garnered without the hedge fund's intervention. Now, the researchers found that in 36% of the targeted deals, the activists were able to successfully block them from closing. That compares with the norm, where only 9% of deals fail to close. In about 17% of the cases studied, activists were able to get better terms for the acquirers in the deal. And as for deals that tend to be targeted, well, they're usually ones that aren't well received by investors to begin with, those that use stock as currency for the transaction, and those with acquirers who have a track record of poor returns on their invested capital, guys.
It's a very interesting way of doing this. How prominent is it in terms of number of deals that are targeted versus the other way around? I mean, we just saw Sky, for example, clearly lots of hedge funds got in late in the game to get the final little bits of gains. This is the opposite. Is it as prominent?
So bumpitrage is, I think, the strategy that you're referring to. And that's also a popular tactic whereby activists will take a position in the target and then urge the acquirer to bump up the price. This, of course, is required for a deal that requires shareholder approval. But this idea that they're breaking apart deals is becoming increasingly popular over the years. It goes back to at least 2010, where we've seen this strategy take place, but we're starting to see more and more examples. And the researchers found that Jana is actually the most active of the activists in pursuing this strategy.
It seems to me one of the appeals of it is you can see when the deal's announced, the market's verdict on it, right? The market knows if they think this is too expensive, if the acquirer is taking on too big a bet. And so you could be pretty sure if you manage to break up the deal that the stocks are going to go your way.
Exactly, in the opposite direction. And as we see more and more activists getting into this space, they're starting to come up with more creative ways to earn a buck. A lot of the low-hanging fruit has been picked over the last few years. So this strategy is becoming increasingly popular as all of the low-hanging fruit in terms of kind of bringing deals together has already happened.